VIX is high, you gotta buy. When the VIX is high, you gotta buy. When the VIX is high, you gotta buy. When the VIX is high, you gotta buy. VIX is over 30, time to get dirty. VIX is over 30, time to get dirty. VIX is over 30, time to get dirty.
Welcome back to the channel. The market has been wrecked lately. Tesla, I think, was down 15%. I want to show a few of the stock charts that are notable today, but because Tesla is so important, I want to cover the fundamentals, the news, and the chart for Tesla stock. So let's jump in. First, the headlines that I just found for Tesla. Tesla shares plunged 15%, suffering steepest drop in 5 years. That's pretty big. Tesla shares plunge as Musk's political role grows more divisive. Interesting sentiment. Tesla stock has lost its Trump bump. Here's the latest bad news. Wow, so all the news looks pretty bad today. Should you buy the Tesla dip? And then let's jump over. I like to use Grok because they have access to Twitter/X posts, so it's sometimes quite insightful. As of March 10th, Tesla stock is reported to have dropped 15%, driven by a combination of broader market conditions and company-specific challenges. U.S. stocks, including tech giants like Tesla, plunged due to fears of a potential recession fueled by ongoing tariff disputes and concerns over a possible federal government shutdown. News reports indicate that the Nasdaq Composite fell 4%, reflecting widespread economic unease tied to President Donald Trump's economic policies, such as increased tariffs on imports from China, Canada, and Mexico, regions critical to Tesla supply chains and sales. So that's the big gist of it. People are worried about a potential recession, economic slowdown, less enthusiasm for Tesla. Let me show you the chart. So this is a Tesla daily chart. And as you can see, there's a big old red bar that sticks out right there. That's down 15.5%. So one of the biggest movers today. And looks like there's a gap from October of last year. It gapped up, pretty much never came back to fill that gap. It looks like we're filling the gap now. But does that mean this company is no good? Maybe it is good. How would we know? So a quick technical view on my chart. Let me get rid of some of this noise. I said some of it. So Tesla did go as high as $480, let's say, maybe even higher, almost $490. And at that valuation, or that price, it was 17 times sales and 100 times cash flow. So it was what we would consider expensive. So it makes sense that there would be some profit taking. When Tesla was the cheapest recently in the last year, it was 5 times sales and 45 times cash flow. If it's a growing company, those numbers are sometimes anticipating future growth. But we know that if we see it at 5 times sales, that was where it bottomed out. Right now, it's at 8 times sales. Also, this yellow line is the 1,000-day moving average. And historically, it doesn't hang around below that number, that line for very long. If you did buy Tesla below that line, that 1,000-day moving average, you did well over time, especially back when it was super cheap in 2018, 2019. Let's jump over to Seeking Alpha, where I like to get my earnings numbers, and forward PE is 92. That's still quite expensive. For a growing company, you might pay anywhere between 20 and 40 PE. So this is a very optimistic PE still. There's some bullish articles, buy, sell, sell. I'm not going to go into those articles, but we want to see their earnings. Future earnings growth 15%, 32, 25. We can comfortably say over 5 years, 20% annual growth. So it's a grower. There's no doubt about it. Tesla is a grower. If we go into a recession, maybe those numbers can come down, but this is a growth company. So it makes sense that the PE should be a little higher. These are the, let me move my, these are the earnings per year. And as you can see, for this year, we're expecting $2.79. And over the next decade, that 2 earnings per share goes to as high as $36 earnings per share. And we would like to see more analysts. There's only one predicting anything for 2034. But this company could earn $36 per share, hopefully forever. We don't know. But this is what growth looks like. So if you pay, whatever you pay today will be dwarfed by the earnings. At least that's what we hope. So let's see, let me, $222 at this earnings level is a 93 PE, but $222 in the future, this will be a bargain. That would be a 7 PE. But obviously paying a lot today and then waiting for the growth won't be as good as paying a little bit today. So as value investors, we would love to see this at maybe a 20 or 40 PE, but that would be pretty bad for the stock price. Honestly, it's looking pretty rough. Like if I look at other stocks, we have NVidia. It's quite weak today. Palantir also, it's had a huge run. And it just seems like a lot of these stocks are getting, they're getting normalized. Robinhood, same thing. It ran up. Now there's profit taking. Even Apple had a big down day, 5%. SoFi, it's coming back. It had an 11% drop. Amazon is pulling back. Broadcom pulling back. Google had a down 5%. I don't think it's a disaster, but I think there is some profit taking in the market. Some stocks that were slightly overvalued. We were pricing in a lot of growth. They're just going to end up normalizing. So I think people should have some kind of a system to take profits when they have big winners, because this can happen. You know, the market goes two ways. It doesn't just go straight up. So where could it go? It really depends what happens with the economy. If we do go into a recession, there might be more selling in Tesla. But you better believe there will be a price where Tesla is attractive. The hard question is gauging that price. I like to put on trades when the stock is breaking through and going below the 1,000-day moving average. We know it bottomed around 143. I would start to look anywhere below this 1,000-day moving average. So from 222 to 138. I would be looking to put on trades, short put spreads maybe, and then see if it's worth accumulating shares. There's a lot of good growth stories, good themes that could push Tesla higher over the long run. if we do go into a recessionary, slower growth period, we're talking about maybe 18 months of weakness. And the lower it goes, the better it is for a growth stock like this. All-time high for, or not, is that the all-time high? Yeah, it is all-time high. If it went back to 141, that would be a 70% decline in the stock. Wow. But you better believe I would be looking to shop around there. When stocks are down 70, 80%, when they're in the trash and nobody wants them, that's when you want to start picking at them and accumulate a long-term position. And then 2, 3, 4, 5 years later, good things happen to the stock. So is that too conservative? I actually don't think that's too conservative, because when we look at the sales, when we look at the cash flow, that wouldn't be too conservative. That's another 36% drop. I'm looking, there are so many stocks out there. There are actually quite a few that are a better deal than Tesla, that for me personally, while I am bullish, I want to get a deal, because there's risk, there's variance. This stock is down 54%. If I bought it here at 480, I'm not feeling very good right now. Even though the future looks good for Tesla, I still want to get the lowest price possible so I can make money as an investor. Paying up is not a good thing, in my opinion. If $36 in the future, maybe Tesla goes to 700 in the future, right? Let's see, if we do a table, let me remember how to do a table. If Tesla in the future, let's say 2034, I think it's 2034. 2034, if they earn, what do we say, $36? $36.79. $10 PE would be 360. Let's add some rows. Whoops. We'll say at a 20 PE, 20 PE. We'll do a 30 PE as well. Could be like 720 stock price. Maybe 1,000 at 30 PE in 2034. So if I buy it closer to 100 or 150, I'll make more money. Maybe 7x. If I pay 200, it's only 5x. It's still a good return. But if I pay 477 and it goes to 1,000, it's only a 2x. So the price I enter at does matter. I'm not trying to be a bear. I know that it is not cool to be a bear. Nobody likes a bear. But the lower it goes, the more attractive it is, the safer it is, because, you know, stocks don't just go straight up. I need a deal. Let me know if you agree. Could Tesla go to $1,000 in the next decade? I think Kathy Wood said $5,000. I'm not quite sure. Let me know in the comments if that's correct. But if this is potentially someday going to be $1,000 stock, what's a fair price for it right now? Is $150 a fair price? Is $200 a fair price? You let me know your analysis and help the investor community. See you on the next one.